Welcome to TradeTheMBA.com. This is John's report is for the 12th of July, and you can see that, well, the other day we just dipped right down to the ABM yellow, found support right there, and plopped up above it. We did get a full breakout here of the DOC spread in the sense that we have all the criteria that you really look for. A series of positive extremes, orange, catapults above both steel, green crossing below cyan, cyan moves above red, and that's producing this magenta candle right here and now. Now it's a little early, of course. This candle hasn't closed. It's likely it could close near or around the highs, but it's a clear indication that there are some warning signals, and the fact that it happens, you know, what some people would like to pre-describe as a double top, and sometimes those work, but the reality is you can get a retrace, have a third top, and so on and so forth, or consolidation. But this is the clearest signal. And if we see the red like this dipping below zero, that's a significant move, particularly when it comes right up to the 0 point and rolls around. So that's something I always look for, even on the intraday charts, very effective as well. And you can see NASDAQ performing pretty similar. They're both very close to that 100% level, and just a relative range. And it's just something we've been looking for, the markets to reach parallel construction is kind of a mean reversion back to normalcy. And of course, we talked about this, the dip of the highs was pulling the euro up, but pulling it up just to what was previously just the 38%, and rejected off that. Trump has been very tough on NATO and whether they may have to spend more on defense, and that whole dynamic. Certainly none of this suggested the euro was going to do anything anyway, but that's a different story. Treasury's still way outside given what we're seeing with inflation, which a big help here that they had the huge drawdown of reserves, but Saudis announced that they were dramatically increasing their output. That helps alleviate it, but again, there's a limitation to this because refined products, there's only so many places, and U.S. hasn't really built any new facilities to handle that, and that's going to be always an interesting bottleneck if the economy continues to heat up, because it takes a while. We can clearly see the DOC spread, very strong move from that. I mean, once the break of that ABM, it was very clean, and boom, all the way down to the ABM green. Perfect, right within the two zones. Love it when it's like that, nice and easy. And gold, like we talked about, would have to come back, fill in the dip down here, and it's doing just that. It got overbought even within like this just little pop here, and that always cracks when people say, how could it be overbought there? Well, it's the algo activity that's letting you know that things have moved to an extreme at that particular spot. It was still well within a buy signal with this massive dip of shorts pretty much not involved, and then as soon as they activated again, that was just not enough buyers to propel it. And you know, you can argue about central bank manipulation, and I think where we saw the trade for inflation instead of in gold is really moved to oil, because oil maintains that liquidity, and it's something we talked about the other day where we weren't getting any bite out of like cryptocurrencies. Again, collapse there. Oil, definitely 100% convertible, tradable product, no question about it. Certainly fits within all the criteria that you would look for. And as an inflation hedge, blah, blah, blah. So, just because the pressure on gold has just been an interesting one, even though there's the demand for commodities is certainly rising with growing economy. All right, let's expand the chart a little bit. Let's look at the other day. It was interesting because we ended up kind of a little bit of counter signals. We've got our white candle. Certainly came back, filled it back in. That doesn't mean that it isn't going to get visited again. Usually they do. But we produced a gold candle below 50%, so that usually calls for a move back down towards the lows, or at least to where this candle opened, which was at the 23. Get my chart to cooperate and show me my price line. There we go. Any day now for the info window. Being very difficult on me here. This is hilarious. I'm getting the crosshair here, but not my little data win. Well, regardless to say, it performed a little bit unusual because it made it to the 50% point right over here, and then we reverted back. Oh, it's got me in the white dot. That's why it's not giving me a... There we go. That was it. So the low was right around 72.50 with the close at 78, which was up at the highs. But to me, what was interesting about this, we came across the sideways, and you expect this to return down to the low. We ended up getting right to the ABM green, which was a low of 75, which was just below it. It's like... I really would not be completely satisfied. But then what happened was, with this massive dip of the Fibonacci high, called priced right up to the 100% zone. So when it dipped and ended up being above 50% simply by the dip, it sort of de facto hit it. But that didn't change anything, because at the end of the day, we still came back and filled it right in and made it to zero. The problem is that the zero became the old 23 from back over here. So if we just draw our little line, we can see that we came back and hit it right over here. Just like that. And this one was an interesting one because it produced a close right at the 50%, just a fraction above, but immediately fell off. And this was an interesting because it came with an orange dip below red, but you know me, I like that first dip of the orange, and that didn't happen until all the way over here. It was the first dip of the orange, and that was the beginning of what was the final end, where we ended up with our two bullish dots right at the zero line, and that did create a little pop right there at the end. And we produced another gold candle, same situation. This one actually did push all the way down to the lows, and look at quite a few series of dots with both just below the red line as well as not, and it immediately popped above there. That was the beginning of the post market, and right as that happened, boom, you get a nice easy ride because there's no resistance, and that's where we find ourselves right at this particular point, zero resistance point, and creating a relatively new buy setup here up at the peak 85, 86 range. Starting to put in a couple of yellow little warnings of algo activity. Potentially, if we get a grouping of them that could peak out, you can just see that we did get the blue one right here, go across a couple bars, and boom, full 50% retrace. I was not around for that. That was still later in the afternoon, U.S. time. So, starting to see some really creative algo activity at this particular point. So I would continue to follow the ranges. Did tell a friend to take the daily chart and flip it over to a weekly, and it's an interesting viewpoint to go from the daily to the weekly and what it represents from a broader chart standpoint, because it gives you a very different view. So if we look at the weekly setup, we've been in this drop algo activity all the way from, almost 2,900. Came down and you can see that we're virtually, with the orange dipping, almost about to create a new buy setup within a weekly standpoint. It's kind of crazy. The shakeout's been a disaster for, well, all the way back to, what was it, February or so, and has not improved from a weekly standpoint, but just starting to show signs of life. We also had a little bit of it right here where it began to pop, but worth noting, and can't hurt to, you hear all of the devastating news about, the market going to zero, blah, 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 blah. But if inflation really is starting, the reality is you're going to see price increase for the market as a multiplier effect, just to account for it. And people often forget that one because, well, it's been a decade since anyone's had any inflation. So first opportunity for them to actually factor it in. Now, keep posting any relevant charts as they come in. I would expect we might see another gold candle or so in here, and if it happens on a dip, that could be an effective play. As always, though, trade well. We'll talk again later.